Hi traders, and welcome to my video on Connors RSI Strategy. In this video I'm going to show you how you can capture moves like this for over 200 pips and this one for over 300 pips. So this is an EJ, a Euro Yen 1 hour chart. I'm using the MT4 trading platform. I've downloaded the Connors RSI indicator and applied it to my chart. You can see it here below. Okay. You can find the indicator for your trading platform if it's not already included. Otherwise, you can use the default RSI indicator. I'll just attach that for you now so you can see. It's quite similar. However, the Connors RSI indicator is more reactive. Okay, so it would perhaps be slightly better for this particular strategy. That being said, the standard RSI will also do a similar job. Perhaps you would want to adjust the periods if using the standard RSI to make it more reactive. For example, if you change the period from 14 to 17, it starts to mimic Connors RSI slightly better. Connors RSI period is actually 3 on this. So if we just set the default RSI to 3, you can see it's very similar. Okay. This crossover here on the Connors RSI above that line did happen slightly before the standard RSI, but it's really swings and roundabouts. It's quite similar, so you can just use the standard RSI if you please. Okay, so the Connors RSI indicator, basically it works like a normal RSI, and how that works is when the RSI is above this level, this line here, okay, is said to be overbought. And there may be a reversal to the downside. When the RSI is below this level, the market is said to be oversold, and there may be a reversal to the upside. Okay, so this lower level is 30. Anything in or around that is oversold. This level here is 70. Anything above or around that is overbought. So that's the first aspect of the RSI. Then the second thing to look for is divergence. Divergence basically means when it's making higher lows, the market is trending upwards, and when it's making lower highs, the market might be trending downwards. So for example, you can see the lower highs here and the market starts to fall. Yeah, so that's divergence basically. And when the market was rising here, you can see the RSI was diverging upwards, lower highs, higher lows, and the market was moving up. As it started to fall back down, the RSI reacted and made lower lows, market falling. Okay, so now you have the basics of the Connors RSI indicator. How do you know when to take the signals? I mean, some traders might want to just sell every time it goes in the overbought zone and buy every time it goes in the oversold zone. Definitely wouldn't do that. Granted, there will be instances when that can work out for you, but a lot of the time you could be buying against a strong downtrend or selling against a strong uptrend. So what I first like to do is determine the trend. Okay, so we have a nice support level there. Have our resistance level here. Okay, it's a double top candlestick formation or W pattern. I do have videos on both of those you might want to check out. I just think it's good to be aware of as many different formations, chart formations as you can. In fact, this would be a triple top, 1, 2, 3, or triple bottom, 1, 2, 3, because the resistance and support has been tested at least 3 times. So we're going to look for a breakout either side. We have our breakout to the upside. That may have been a trade in itself, the breakout there. Nice bullish candlestick action, and you can see that this resistance level then holds up well as support here and here. In fact, we'll just continue it onto there for later in the video. Okay, so we have a breakout of this resistance level and a nice upwards move there. Right, so what we can do is once we've established the trend, which is upwards, clearly, there you go, nice trend line for you. We have an uptrend. How do we enter using the RSI? Well, what we do is we look for an oversold RSI in a market that is trending upwards. Because if we can buy when the market is oversold, we can get a favorable entry into a trend, into an uptrend. So it's oversold here, and that's when the market pulls back. And you have this hammer candlestick pattern here, and followed by this big bull candle that completely engulfs the body of the previous candle. So this is all bullish, a bullish signal. And if we just mark that there, see the RSI cross back above the 30 level. When that happened, that could have been entry into this particular trade here. We could have placed our stop loss just below the level of support, so around 10 pips. And this went for, over 150 pips. Would have been a nice trade based on trading the RSI pullback in an uptrend. Okay, so simple as that. Identify first the trend. We did that by finding a breakout of resistance. Nice uptrend, market making higher lows, and we entered on the pullback. Okay, some traders wouldn't even need the RSI to have taken this trade. You can just visually see the pullback there. Okay, then look at the candlestick patterns. I do have many videos on candlestick patterns that you can be aware of, which can help you time your entry. And that would have been a good trade there. If we go back to the very start of this trend, there was a crossover of the RSI there, and you may be thinking, well, that would have been a better entry point, and it certainly would have. However, the market can still go down. Okay, it may go up a little bit, then continue down. By waiting for a trend to form, in my opinion, we can improve our chances of taking a good trade because we've got that trend confirmation prior. As I said, I wouldn't just buy and sell every single time there's a crossover. As price moves up, had we taken this entry here, as price was moving up, you could have used a trailing stop below the low of the candles and just locked in your profit on the way up, maximize the move as much as possible. What I wouldn't want to do is if we did have a 10 pip stop loss, just to exit after 30 pips fixed, say, okay, I've got a 3-to-1 risk to reward ratio. As soon as there's 30 pips, I'm getting out, because if we do that, we exit prematurely and we miss out on all this move up here. So we could at least move the stop loss to break even and then start locking in profit on the way up, even closing part of the position if you want to bank some pips. Okay, and then you could exit when you see indecision in the market here, the consolidation, and you also have the divergence downwards on the RSI, suggesting that the market is reversing, and that's exactly what it does. So if we go to this area here, we've just taken that nice long trade. We can mark off our resistance level here. Strong level of resistance, tested multiple times. Nice double top formation. Can also mark in support. Our support level probably around here somewhere, and then some traders would have taken this breakout trade here to the short side, especially as the RSI had been overbought. So that could have been an entry, although as before, we can wait for the trend to form for confirmation. Okay, then wait for a pullback. We know this level of support and resistance from before, so it's tested, it holds up well, and then we have a breakout below it. And that level then becomes resistance again. You can see it's tested here on this side. So this breakout trade here could have been another entry. We know this level is significant from this uptrend we were looking at previously. And in fact, the RSI did cross up and then back below around here. So that could have been an entry on the pullback into this particular trend based on the RSI being extremely overbought. So downtrend, extremely overbought RSI is a potential entry because we're looking to try and sell at a high point. What we wouldn't want to do is sell when the RSI is saying the market is already oversold. Granted, there are times where it will still continue downwards, but we just increase our chances by buying on the in and around the extreme areas in the opposite direction. Okay. As you can see, if you saw the RSI was all the way down here and you sold, you're selling at the low. Whereas if you wait for this move up and you sell when it's in the overbought, you get a better entry on the pullback. Okay. And then the trend continues downwards. There's multiple re-entries. As the RSI goes extreme and crosses over, you can enter there, around here. Then we need to start being aware of perhaps the trend is coming into consolidation. You don't want to get in too late. I mean, we had ample opportunities to get in prior to here. We see this consolidation zone. Could just wait for a breakout. Okay. So I'll just mark it there because we did have this breakout. The market did reverse back. But that would have been a pullback because after this consolidation, we want the trend to break out again, have a pullback, and then you could have entered here on this breakout, or you could have used the RSI crossover signals. As you can see, if you use that one, the price did continue to reverse, so it wouldn't have been an ideal entry. It just goes to show the indicators are not right 100% of the time. They do require some initiative on behalf of the user, and I mean, you probably wouldn't be selling there in any instance just because you've got bullish price action, got 3 inside up candlestick formation as well, a hammer, a bullish hammer candlestick pattern. You'd probably want to wait for this to play out and for the support level here to be tested. Okay, you can see it was tested, and then price actually break out in the upwards direction. So we would have waited for this breakout below again, the lower highs. A nice wedge formation there. Got this level of resistance as well, so that could have been a good time to enter on this breakout. You can see this level of support come resistance does hold up well over here and here. So on the way down, you can just pick your moments with the RSI being extreme, but this is why I don't take them all. You know, if you sell there on that crossover, you're selling at the bottom. You're going to have to make some effort with price action and support and resistance levels. Perhaps wait for the new level to form, because I had this runaway here. You want this new level to form to test this level, and once you see that that level's held up well, the RSI has crossed over, then you may consider entering based on the RSI crossover. There's a good example. We know there's level of resistance here. It's making lower highs the market, and then we have the crossover down in the extremely overbought. This could have been a good way to time entry and get a few hundred pips on the downside there. Okay. Yeah, so the RSI, Connors RSI strategy, I would just look for a trend, keep an eye on support and resistance levels, and enter a sell trend when the RSI is overbought, or a buy trade when the RSI is oversold. Enter in the direction of the trend. I wouldn't buy if we're in or around the overbought area, just as I wouldn't sell if we're in or around the oversold area. And always keep an eye on divergence. When you see the RSI starts to show divergence to the upside, you might want to not take short trades, just as when it shows divergence to the downside, you might not want to take long trades. Okay. Hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe. It will really help my channel, and I hope to catch you on the next one.